How's it going, guys? In today's episode of YouTube Stock Portfolio, I'm going to show you 3 ways I use in order to find great businesses to invest in, what methods do I use to narrow down my searches, and hopefully we will find some stocks that will potentially make it into our public portfolio. If you're new around here, in this series we go through every step of finding great businesses, analyzing and investing in them. So if that's something that you'd be interested in seeing more of, make sure you become a subscriber and hit that notification bell so you don't miss out on any of the new videos that are coming out. There are a lot of businesses out there that we know we will never invest in. So an important skill to develop is learning how to filter down into businesses that we will potentially invest in. And the first method that I use is called industry selection. Firstly, we just want to write down 3 broad sectors that will, 1, have businesses that we're interested in, and 2, businesses that are easy to understand. For this video, I've picked 3 sectors. The first is consumer discretionary, which is businesses that benefit from people having excess cash. The second is consumer staples, which is businesses that sell products that people buy regardless of the economic condition. And the third sector I've selected is technology, and I think we all know what technology is. Next, we want to go through each of these sectors and pick out some industries that will, again, 1, have businesses that we're interested in, and 2, have businesses that are easy to understand. So from consumer discretionary, I've picked automobiles and hotels. From consumer staples, I've picked beverages, and from technology, I've picked internet. Finally, we want to go into each of these industries and sort them by their market share so that we can find a couple of businesses in each that interest us, easy to understand, and have significant market share. From automobiles, I've picked Ford and GM. From hotels, I've picked IHG and Wyndham Worldwide. From beverages, I've picked Coca-Cola and PepsiCo. And from internet, I've picked Apple and Amazon. The second way I like to find great businesses is to see what other people are talking about. And there's a number of different platforms we can go on in order to see what stocks are being talked about the most. And I'm not just talking about businesses that people are talking or saying positive things about, and stocks that are really hyped at the moment, because that's probably the stocks we want to stay away from. But you will also find stocks that people are talking about that everyone hates, or there's some really bad news has come out about it. And we can use that in order to see if the stock price has taken a dip and the company fundamentals are still strong, and we can use that as an opportunity to buy into some value. So there's a couple of main websites that I use in order to find information about new stocks and see what people are talking about, what's the latest news. The main ones are Yahoo Finance. I also look at Bloomberg and CNBC. And then, of course, just YouTube. What are the other YouTubers in the financial space talking about? Especially those videos that are 3 stocks to buy, 3 stocks to watch. Even though you shouldn't go out and buy those stocks just because your favorite YouTuber is talking about it, you can see what other people are talking about and get some ideas for businesses that you want to research. So I just went onto YouTube and searched stocks September 2018, and then I just watched a few of the videos, or just scanned through some of the videos to see what stocks people are talking about, and I would shortlist a few that are interesting to me. From a quick look on YouTube about what people are talking about, I came up with 3 more stocks that we can add to our shortlist, that being Activision Blizzard, Google, and Shopify. Now, while both of these methods are very useful, they are not the primary methods that I use in order to find stocks. The best way to find stocks is to use a stock screener to filter down based on what fundamentals we are looking for in order to get a specific list of businesses that fit maybe 3 or 4 of our criteria. The screener I used for this is FinViz, and essentially I used a number of different descriptives in order to narrow down my search. So the first ones that I used was I narrowed it down by market share. So I only wanted businesses that are bigger than $2 billion in size. And I also only want businesses that have been around for more than 10 years. So their IPO was more than 10 years ago. Then on the fundamentals tab, I said that I want a debt to equity ratio of less than 0.5, sales growth for the past 5 years of over 15%, return on investment, which is the same as return on invested capital, of over 15%, a current ratio over 2, and EPS growth over 15%. I also screened for a PE of less than 30, and a subscriber commented on my last episode asking me whether or not I would invest in growth stocks that have a PE of higher than 25 to 30, because that's something that Benjamin Graham talks about in The Intelligent Investor. And I almost entirely agree with what Benjamin Graham says in chapter 7 of The Intelligent Investor, and that is that you just can't get a margin of safety from a company with a PE of 30 or 40. If a company has a PE that high, you're relying on that company doing very, very high double-digit growth for many years. And that just means you just can't get a margin of safety because there is a lot of risk, and if they miss that and their PE falls and their earnings and their growth falls, then they're just going to vastly underperform your expectation. What I mean by this is if you have a company that has a PE of 40, 50, or maybe even like 100, then you're going to have to put into your calculations or your valuation, you're going to have to assume that they're going to make 30, 40, maybe even 50% growth each and every year for 5 or 10 years. And I would never use a growth rate that's above about 25 or 30 for a 5-year period and over 15% for a 10-year period, because it's just not practical. It's just not what happens in reality. The chart that I'm showing on screen is the sales growth over a 10-year period for all the businesses in the S&P 500 from 1993 all the way up to 2010. And as you can see, while there is a wide variance in the growth rates over a short period of time, those really high businesses that are getting really strong growth and the ones that are performing really poorly, over that 10-year period, all of their growth starts to move towards that average of 10 to 15% per year. So if you're going to be assuming anything much higher than this, you're just taking on way too much risk, and it's just something that just doesn't happen in reality. So from my screening, we had 16 stocks left at the end of our filter, and remember, this is just a free website, so it's not going to have every stock and it's not going to have all the correct information. So there are definitely more businesses out there that fit all this criteria, but they just won't be in this list because this is a free stock screener. And if you have a premium one, you will get probably more stocks that come up in this search, but I also wouldn't pay for a premium stock screener because I just think it's not worth the money. So after doing this screener, I had a look through, and a lot of the industries are ones that I would not be able to understand, such as semiconductors or biotechnology, but one did stand out to me, and that is Stamps.com, so we're going to add that to our shortlist. In the next episode of YouTube Stock Portfolio, we will go through each of these businesses in our shortlist and start to analyze them and decide whether or not they're going to make it through to our further analysis or whether we're going to cull them. If you have any questions about what I talked about in this video and maybe questions about what I'm going to talk about in next video, make sure you leave them in the comment section down below and I will be sure to include them in next week's episode. I hope you guys have an awesome day, and I'll see you in the next one.